What if I told you that the key to financial freedom might not be in owning your own home, but in renting one? Listen, I know it sounds crazy, but in today's housing market, the numbers tell a different story than what we've all been led to believe. In this video, we're going to solve the rent versus buy equation once and for all. We'll break down the real costs, crunch the numbers on a $400,000 home, and show you why renting might actually leave you with more money in your pocket. But before we move on, I want to leave you with even more money in your pocket. I have created a free Skool community for you all to learn even more about business, entrepreneurship, and personal finance. Join today by clicking the link in the show notes below, and let's build your path to financial success. Alright, let's dive into the hidden costs of home ownership that most people don't know are coming. We're going to break down the real expense of buying a $400,000 home, which is pretty close to the average home price in the US right now. You might think your mortgage payment is all you need to worry about, but trust me, there's a lot more than that to it. Let's start with property taxes. For a $400,000 home, you'll look at about $400 per month in property taxes. Now that's a pretty big chunk of change that you'll need to factor into your budget. And don't forget about homeowners insurance as well. You'll need to set aside around $200 per month for that. These two expenses alone add up to nearly $600 per month on top of your mortgage payment. But wait, there's more. One of the biggest surprises for new homeowners is the cost of maintenance and repairs. Experts recommend setting aside about 1% of your home's value each year just for keeping things in good shape. For our $400,000 home, that's around $4,000 per year, and that's just for routine stuff. What about those big unexpected repairs that could pop out of nowhere? Let's talk about replacing roofs for a second. Now, replacing a roof can cost you between $12,000 and $15,000, and you'll need to do it about every 20 years. That's a huge expense that most people don't see coming. Or how about boilers? They usually need to be replaced every 10 years and can set you back around $2,000 to $3,000. And these are just a couple of examples. There are always little things that need fixing, like broken tiles or leaky radiators. When you add up all these costs, mortgages, property taxes, insurance, and maintenance, you're looking at a total monthly cost out-of-pocket expenses of around $3,500. And for that $400,000 home, that is a hell of a lot of money. And we haven't even talked about utilities or upgrades that you might want to make. The truth is, many people underestimate these cumulative costs of home ownership. They focus on the mortgage payments and forget all about the other expenses. This can lead to some serious financial strain if you're not prepared for it. It's like buying a car and forgetting that you'll need to pay for fuel, insurance, and servicing. Before we move on to our next section of the video, guys, I need more of you to subscribe so I can keep on creating this great content for you. If you'd be so kind to like and subscribe to this video, it would mean the absolute world to me. Alright, let's flip the script and take a fresh look at renting. You've probably heard people say that renting is just throwing your money away, right? Well, what if I told you that this common belief might not be as solid as you think? Let's crunch some numbers and see why renting could be actually a savvy financial move. Let's compare renting and buying that $400,000 home that we talked about earlier. Here's something that might surprise you. The total monthly cost of owning the home, that includes everything that we've discussed, can reach around $3,600 a month. Now, here's the kicker. Renting a similar property could cost you around $2,100 a month. There's a difference of $1,500 a month there. But wait, there is more. Remember that deposit you needed for a house? Well, let's just call that $40,000 for example. What if instead of putting that money into a house, you invest it into the stock market? Over 15 years, that investment could potentially grow to over $600,000 in cash. Now, compare that to the equity you gain from home ownership in the same period, it would much likely be significantly less. Now, I know what you're thinking, but Alan, when I rent, I'm not building any equity at all. And listen, guess what? You are right, but here's the thing. Renting comes with a fixed monthly cost. You don't have to worry about those hidden expenses we talked about earlier, like maintenance, property taxes, and insurance. It's a much simpler financial commitment. But what about rising rents, you ask? And it's a very good question. Experts predict that the average multifamily rents will grow by about 2.8% annually over the next 5 years. That's actually pretty modest compared to the rising costs associated with home ownership. Here's another fact to consider. How long do you plan to stay in one place? Now, the average American only stays in their home for about 13 years. If you're not planning to put down roots for at least that long, renting might be the more economical choice. In fact, in many markets right now, renting is less expensive than buying. Data shows that in all major US cities, renting a home today is significantly cheaper than purchasing one. That's a pretty big deal when you're trying to make the most of your money. So what does this all mean for you? Well, it means that renting isn't just throwing money away, it can actually be a smart financial strategy. By renting, you might have more flexibility with your finances and potentially more money to invest elsewhere, maybe in your business or in the stock market or in your own personal development. You know that saying about home values about them always going up? Well, it's about time to take a close look at that, because the housing market isn't that simple, predictable beast it used to be. In fact, it's gone through some pretty wild changes lately, and that's really shaken up the whole rent versus buy debate. Let's break down what's been happening in the housing world. We've seen some crazy swings in home prices and interest rates over the past few years, and trust me, these changes aren't just numbers on a chart. They have a real impact on whether buying a home is still a steadfast investment it once was thought to be. Here's something that might surprise you. In some markets, it can take over 10 years for buying to become more profitable than renting. Yeah, you heard me right, 10 years. That's a hell of a long time to wait for your investment to pay off, especially in places like Los Angeles and London. These areas in particular have seen such a big jump in home prices that it's going to take a while for them to settle back down to what we used to consider normal. But why is this happening? Well, there's a couple of big factors at play here. First off, we are dealing with a massive housing shortage in the US and the UK. We're talking about a shortfall around 3.8 million homes in the US, and get this, almost 90% of that shortage is in single family homes and smaller multi-unit buildings. That's the kind of housing that a lot of first-time buyers are looking for. This shortage is keeping home prices high, even as other economic factors might suggest they should come down. It's creating what experts call a cost to buy premium, basically the extra cost you pay to buy a home instead of renting one. And this premium isn't going away anytime soon, let me assure you. Another big factor is mortgage rates. Remember those super low rates we saw during the pandemic? Well, those days are long gone, my friends. Long-term mortgage rates are expected to stay above pre-pandemic levels for a good while longer, and that's having some interesting effects on the market itself. People who are locked in during those low rates are staying put. They don't want to give up their sweet deal, so they're not selling at all. This means fewer homes in the market, which, you guessed it, pushes prices even higher. Now listen, I'm not saying that home values are never ever going to go up. They generally do appreciate over time, but it's not the straight line that some people think it is. Home values are influenced by all sorts of factors: where the home is located, what the interest rates are doing, and how the economy is performing. Even things like inflation come into play. So what does this mean for you if you're trying to decide whether to rent or buy? Well, it means that you need to think very, very carefully about specific situations. Now, renting isn't necessarily throw money away, like we talked about earlier. In fact, given the current market conditions, it might be the smarter move to rent in some cases. Consider this: according to JLL, rents in the UK will rise by 17% by the end of the decade, and that's pretty much in line with what we saw before the pandemic. Compare that to the roller coaster ride we're seeing in home buying costs, and renting starts to look a lot more stable. All right, let's tackle a big question. Is owning a home still the best way to build wealth? We've heard all things that buying a house is a surefire path to financial success, but in today's market, things might not be as clear-cut as we once thought. Let's run some numbers and see how your wealth might grow if you buy a home versus if you rent, and invest the difference. You might be thinking, Alan, come on, everybody knows that buying is better in the long run, but hold on to your wallet, because what I'm about to show you might change your mind. Here's a mind-blowing fact for you all: over a 15-year period, renting could actually leave you $289,000 richer than buying. Yes, you did hear that right. And how is this possible? Well, it all comes down to what you do with the money when you save by renting. Let's break it down. Say you're looking at a $400,000 home, but instead of buying, you decide to rent a similar place for $2,100 a month. Now here's the key: you take all that money you're saving on mortgage payments, property taxes, insurance, and maintenance, and you invest it. We're talking about investing in the stock market, specifically in an index fund that tracks the S&P 500. Now, you might be thinking, but Alan, real estate always goes up in value. Well, not as much as you might think, let me assure you. Since 1990, housing values increased by about 250%. Now, listen, that sounds pretty good, doesn't it? But check this out. In the same period, the S&P 500 has skyrocketed by nearly 3,000%. That's more than 10 times the growth. So, what does this mean for your wealth? Let's fast forward 15 years. If you consistently invest the difference between renting and buying, and let's assume a 7% return in the stock market, you could potentially have over $600,000 in cash. And that's a lot of zeros, my friends. But wait, there is more to consider than just numbers. Renting offers something that home ownership doesn't: flexibility. As a renter, you're not tied down to one location. You can easily move for a new job or opportunity, or to be closer to family and friends. Plus, you don't have to worry about the unexpected repair costs or rising property taxes. All that stress, it's your landlord's problem, not yours. Now, I'm not saying home ownership is a bad thing. For some people, it's still the right choice, but What I want you to understand is that it's not the only path to building wealth. The game has changed and we need to adapt our strategies. Experts are actually predicting that it's going to take a combination of falling home prices and lower mortgage rates to make buying a home as financially attractive as renting. And with long-term mortgage rates expected to stay above pre-pandemic levels for a little while longer, we might be waiting a long time for that to happen. So what's the takeaway here, guys? Building wealth isn't just about home ownership. It's about making smart financial decisions based on your unique situation. For many people, renting and investing wisely can potentially lead to greater long-term wealth. It's all about looking at the bigger picture and considering all of your options. As we wrap up this video, it's clear that the rent versus buy decision isn't as straightforward as we once thought. Today, it's more important than ever to consider why you're buying, how long you plan to stay, and what the cost of rent is in your area. These factors can have a huge impact on your financial future. One tool that can really help you out is the rent versus buy calculator, and I've created my own calculator which you can access below for free by clicking the link in the show notes. But here's the thing, guys, there's no one size fits all answer. Your best move depends on your personal situation and your goals. If you're unsure and you want some guidance, speak to a financial advisor to see what suits your personal situation. They can help you navigate through all complexities and make sure you're making the right decision for you and your family. Remember, whether you end up renting or buying, the most important thing is to make smart financial decisions that line up with your long-term goals. So take your time, do your research, and make the choice that's best for you. Right guys, we've reached the end of this video. Smash a like, subscribe to this channel, and I'll see you all in the next one.